Robert Sinclair, welcome. Thank you for joining me today.
Pleasure to be here and join the Kensington webinar series.
Brilliant, thank you. So the key question that we're seeking answers for today is the mortgage landscape improving for brokers? Any first thoughts?
It's kind of mixed, I think, is the way I would describe it. And it depends where you are in the country, I think. There are some pockets where there's a great deal of positivity, things are getting better. There's other parts where I think it's fairly static and stable. I think the biggest challenge firms have got is that they've seen their income probably falling from a mortgage perspective over the last 2 years. FCA data tends to indicate that firm income is down 10% from 22 to 23. We're expecting another 5% fall 23 to 24, which is challenging.
Yeah.
Good firms are backfilling that with more protection sales, but that doesn't fill all the gaps and doesn't make the mortgage market feel better. What I do believe is that Q4 will be better, but of course we won't see that flow through until 25 figures and 25 income. Therefore, I still think the rest of 24 is going to be challenging from an income perspective, but I think business will pick up.
Interesting. There's a few things you said there that I'm going to come back to actually. But firstly, I just wanted to talk a bit and highlight your amazing career in our industry. Most recently, 16 years at Amy, soon to retire. We'll come on to that again in a moment. The mortgage industry would have changed a lot in that tenure. I wanted to ask you how you think the role of a mortgage broker has evolved in that time.
If you go back to 16 years when I first moved into the trade body world, which was 2006, self-cert interest only was the predominant product of the day.
Popular choice.
And therefore, a lot of people were getting mortgages who probably or possibly didn't deserve the amount they were borrowing. The role of the broker was really just bolt the customer into the lender and hope for the best. And you could say that we were spraying something everywhere, but that's probably where we were. The role of the broker, or I prefer to call me advisor now, is very much around trying to make sure that they meet all the regulatory rules which have been ramped up significantly, all the affordability rules that are much more complex, and the requirements of lenders. And the product landscape has moved significantly over that period. So the whole development of, and whilst there was subprime back in those days, it still wasn't a developed specialist audience in the same way. And if I think of the range of lenders and products that are now available, vastly different. And the advisor has to know a lot more, be a lot more aware. And of course, properties are more complex, people's incomes are more complex, people's lives are more complex.
Absolutely.
Therefore, all of that advice is more complex.
I love that you say advisor and not broker.
It's important to see this, and it's not wrong to think of it in those ways, because I think what you do see is a clear demarcation line between some firms who are very much in that transactional approach of hit one, move away, find another customer. There are others who want to stay with that customer for their lifetime. And both are right in their own way, as long as you're really clear about what you're trying to do, what to achieve, and really clear with the customer about what you're there to do. And I think it depends on the type of firm you want to be. And clearly, if you're in the new build world and servicing new build in that arena of working with a builder on site, it's very transactional. If you're in that space where you're dealing with friends, family, the friend down the golf club, football club, rugby club, your family friends, you're in a very different non-transactional relationship, which is much more about relationship. Robert,
you're going to be leaving behind an amazing career history and legacy. What would you share as your biggest learning in your role and your tenure?
I think I grew up into work as quite an angry Scotsman. I'm probably still angry too often on occasions, as the regulator will refer to. I think I've probably learned to be kinder. I've probably learned that I can't do everything, and building a team around you and if you give them space, they will grow and actually really surprise you. And I think allowing and having faith in the people you recruit is something that's taken me a lot longer in my career to appreciate than it probably should have done. And it's quite important, I think, that people really think about, if you genuinely trust people that you've recruited to be the best they can be, then they will really surprise you. I think that's probably one of the things I've learned the most around all of that.
I love that. That's good. And I was going to ask you what your biggest win was, and maybe your biggest win or your team's biggest win.
Oh, the biggest win is really easy. I mean, it's a long time ago now, but we went into battle on behalf of the mortgage and protection sector to take effectively protection sales, insurance sales out of being linked to pensions mis-selling. So under the Financial Service Compensation Scheme, they were bolted together. So effectively, mortgage advisors were going to be paying for a long time for all the pensions investment mis-selling scandals of the previous decade. getting that moved out into the GI sector was a risk because we didn't quite know how PPI would land around all of that.
Yeah.
But our estimates are that has saved the sector £100 million
Wow.
since that happened.
That's a huge
And that is a huge win. And it wasn't in the first consultation. The first consultation that came out, it was they'd refused it. We went back in and talked to the FCA, and indeed the person we actually ended up speaking to was Andrew Bailey, and got him to agree that it was the right thing to do.
Mm-hmm.
And they then, unusually, the next policy statement came out with a policy statement with a supplementary consultation that changed that and took more protection out of that. That was the single biggest win that I think any trade body's actually ever had with the regulator, because of the sheer cash shift.
Yeah.
But it wasn't a zero-sum game. It saved mortgage and protection firms, but it moved all the costs back into investment firms, which was hard for them, but better for us.
Yeah, absolutely. Robert, I wanted to ask you, what do you see in really successful advisors? What do you think those skills are that really make those advisors stand out?
There's probably one word that exemplifies it, which is empathy. Okay. But I think it's about the skill to listen, the skill to ask good questions, and the skill to not accept at face value what the customer might be saying to us, what they want, but really getting under the skin and working out what they need. And that is the real skill of advising, is really understanding that and making sure that you will go that extra yard to make sure you've defined that whilst the customer might say that's what they want, their need may be different, because they might say they want the cheapest 2-year fix, but actually a 5-year fix that fits their lifestyle might be better. They might think, I think the hardest challenge is sometimes that challenge of somebody walking in thinking they can get that very cheap deal that's available in the marketplace, but actually their circumstances don't allow it. The skill is, how do you turn that customer around without them feeling that there's something wrong with them, that actually we can still help, we can still be in the right place, we can hold their hand and be all the way through that. So I think that's the real skill that makes a great advisor successful.
And I think we speak so much more and understand more about customer vulnerability now than we ever have before. So I think that really plays into what you're saying.
And vulnerability is difficult in our sector because actually, I look at the broad range of financial services, a lot of people have vulnerabilities. If you take people right across savings and current accounts and credit cards and motor finance, there'll be lots of vulnerabilities people have there. People who are borrowing on mortgage predominantly are turning up in full-time work, turn up for work every day and delivering. The vulnerabilities we'll have are much more liable to be things like difficulty reading or hearing difficulties, or a different way we need to communicate with them, or a language issue, not purely financial issues that we need to think about that are present in other parts of the marketplace.
Absolutely. So Robert, coming to the end of your tenure at Amy, a successor is being recruited for and looked for at the moment. Any exclusive update you can give us on that? That
would be very wrong in terms of anybody that may be in the process. Confidentiality around all of that, I think, is always quite important. What I would say is that anybody who's looking to take on a role like this should really think about being themselves. I think if I look back at me and what I've done, I think the Amy job taught me about authenticity. And also confidentiality, the ability to talk to a whole lot of people and remember that if you have that genuine authenticity and confidentiality, you will get an awful lot of information that you can then use, but you must keep it in the box that says, I can't talk about where I've got that from. The Chatham House rule that says, you can talk about what's said, but not who said it or where it came from, is really, really important, and not attributing it to any particular individual firm. I think the other part is, I would say this to anybody, don't try to be me. Because that'd be a very stupid thing to do on every level. But also be yourself, but also think about the things that you genuinely want to be known for, because there are lots of things that are changing. And one of the reasons for stepping away now is that I was looking at this in terms of there are a number of issues that are coming on the horizon that are going to be a 5-year time frame in terms of how somebody understands them, works, and develops frameworks to answer it. And there are 2 or 3 of these that are really big. I think technology and AI is big and going to be a challenge for the industry, and I'm far too old and too antiquated to deal with all of that. I think the green agenda is going to be huge as to how we deal with retrofit and new build. And I think the agenda for that is going to be complex and needs somebody who's going to run with that for a period of time. The D&I work is not finished, and there are big challenges coming out of the regulator, particularly in the protection market, that is going to be a 3 to 5 year cycle as well. It needs somebody else to run with it, because I've reached that age where I'm not committing to working for another 3 to 5 years.
Yeah, absolutely. We'll come back to some of those points as well. Thank you. So we've heard from Simon Betteridge, our CFO, and earlier on in the webinar, and that was talking a lot around flattening of swaps and improving in the pricing market. It'd be great to cover some wider aspects of the market with you now. So let's start in technology and AI. What do you think brokers could be keeping an eye out for? And is there anything that you think's happening that may not progress in the future?
You're not making this easy, Francis, I have to say. But what I think the challenge for advice firms at the moment is really knowing where to go and what to do. Mm-hmm. There's a lot of tech offerings out there, but trying to pick the ones that will work for their business is really difficult. And what we often see is fragmented approaches where people want to bolt things into certain aspects, but how does that fit in holistic end-to-end customer journey? And for firms to make that decision is really difficult. So what they want is something where they can start with the customer inquiry and end up with a completion all in a single flow, not having to log in and out of multiple systems as they're going through this process. But it doesn't really exist at this moment in time. So I think the challenge any firm has is if they're looking to change, what is the core bit they want to invest in or make a decision about that gives them the right answer? Now, it's not for me to make those judgments for firms because there's lots of competing commercial enterprises out there trying to do this. But the one thing I always say to any firm is, look at what will cover the biggest part of the customer journey for you in the way that works for your business and your people. And there's lots of bits around how do you get the customer data into a fact finder lending application? How do you get that suitability factor out there? How do you get the lending application out into the lenders that you're really interested in? I think that there's lots of people playing in all of those aspects. But then the last bit is how does that broker firm allow customer access to all of that so they can see it? Because that's the really hardest bit of having that open architecture that allows everybody to see what's going on with the right security controls.
And there's so many options out there for brokers. There's so many different tech firms offering very similar offerings.
Yes, and the problem is that until you get right under the bonnet or technical specialist, knowing which one is better than the other, very difficult to understand.
Yeah, absolutely. So recently, something very close to my heart, we've seen a lot of consolidation and some acquisition within the market, particularly lenders, Barclays and Kensington being one of the more recent ones. What do you think that would have as an impact on brokers?
I think there's always the worry as what happens for those customers caught in legacy. So there's always that worry, what's going to happen there. I always look at this and tend not to probably get too concerned about it because we have 6-8 lenders of scale that cover 80% of the market, and there's another 100 lenders chasing the other 20%. And there's always going to be fluidity in that. I think the challenge is making sure that the customer's protected in all of this and the advisor's protected in all of this. Because there are some firms that come to market with great propositions that really help look after the advice firm. They might get acquired by another firm who don't think of advice firms in quite the same way. And so I worry about that to a degree. We've seen the supermarkets come to try and do all sorts of things and exit the market. We've seen other organisations. It's been interesting to see two of the bigger mutuals decide that actually acquiring other mutuals is probably too complicated, therefore actually going into the market and buying, acquiring the shares of two entities. And that's quite an interesting thing to look at in terms of structurally what's going on, how they acquire bigger scale. So I think the challenge is how in a strongly regulated world, where things are getting more and more complex from a regulatory and capital perspective, and Basel 3.1 coming in makes that even more complicated for firms. How do you actually manage all of the costs of running a business in what is an incredibly more complex world? So the worry for me is always about where does that leave the broker and the advisor and the customer in all of this. But you have to accept that the world continues to evolve and you can't stop that evolution. It's good. And it's good that actually you think about an industry where firms arrive, are innovative, grow up, and somebody wants to acquire them. That's really positive. Because actually it means they've generated a change in value that people think is beneficial.
And you said earlier about advisors and what advice they need to give in customer circumstances that are so different now than they potentially ever been before and so much more complex. Do you have opinion on kind of the specialist market and where you see that going?
Yeah, I think it's the fact that large organisations are looking at the big banks and the large building society are they truly non-specialists now? Because everybody looks at a customer as being quite complicated. And I don't think we're in a space where you can genuinely just think every customer's vanilla and we'll go through and not touch the sites. Yes, there's still a proportion of those. We've got pretty straightforward P60 incomes, 2 kids, house I can tell from a survey is definitely going to be okay. If you've got complex employment contracts, multiple work, you've got more complicated house that doesn't fit on the grid, you're in some very, very different stuff. And that's a bigger and bigger proportion. You look at just the number of people who want to do self-build now. All of that is, and shared ownership will take us to another place because this government is going to drive shared ownership forwards. And that's a good thing because it gives us different tenures that we've got choices that have probably been out of the landscape for the last decade. So we need to think about how we as a sector support all of that. It's really important from my perspective.
No, absolutely agree. So innovation is a hot topic with both Barclays and Kensington and most lenders at the moment. What do you think lenders need to focus on to support brokers?
It's an interesting one, Francis. I mean, innovation is always been a challenge for this industry in that fundamentally you're giving somebody some money for a house and looking for different ways to get it paid back. The innovation tends to be more around how far up we'll do in the LTV or LTI curve in terms of innovation, or what maximum, or we're playing about with age groups now in terms of how late won't we lend, or how is a 25-year mortgage the right number because affordability means we have to press out to 30, 35, maybe 40 years. Yeah. And we've got all the other stuff running around intergenerational wealth and transfer, and how do we put that together, whether it's joint or a sole proprietor, or all those kind of things are flexing what is still a fairly standard contract, because the mortgage contract is relatively straightforward. Yeah. And we play about with the criteria and the edges. And then you also see us playing about in an industry as with credit score, or what incomes we'll take, or all those kind of things are flexing the muscles of the industry to a degree. Yeah. And it's an interesting one because that flex is probably getting to quite interesting proportions if I look at this over a long-term cycle, because what tends to happen is all the things get drawn back when we get to a point of financial stress or repossessions, and we've not had that number for a very long time. Because we still get repossession data very, very small, but it's when people get ill or have disharmony in their relationships. We've not had unemployment, and it's unemployment that really drives the risks. And I don't see any point in the economy going forward what unemployment's going to get. We went through cost of living crisis with an expectation that unemployment rate would go from 4 to 8%. They didn't go above 5, which is why we've not seen the kind of dislocation in property prices that gives firms comfort that they can still comfortably lend against all sorts of other criteria. Now, that flex is really important, but the key issue for firms is, where is your specialisation? And the clarity that Consumer Duty gives, or should give, is really understanding what it is your product does for which consumers. And brokers understanding which market are they trying to serve. So a broker should have clarity of, am I just going to play in first-time buyer? Am I going to be in standard resi? Do I want to work in areas where actually there might be credit repair or people who've got complex circumstances? And do they market themselves as such into those places? Because then they become specialists. And it might be they want to make sure they've got the right sourcing systems that work with specialists as opposed to the standard resi stuff, which haven't got quite the same granularity around that. And you've got to build your business model around that. That is the modern regulatory expectation, which is really difficult, and it's a change in view about what are genuine good consumer outcomes built off the back of clarity of purpose for both lender and broker. Absolutely.
And how about kind of green new build? We have a large target to hit in the next year. How about innovation from lenders in that area specifically?
It's interesting to see where government thinks they're able to go. I'm challenged by the thought that says, if they're going to meet the £1.5 million house building target, it means in any number I look at, in 28 and 29, they've got to build 400,000 new homes. I can't see where the supply chains are, either by way of labour in the skills or materials come for that. And they've just reconfirmed recently that they still expect the private rented sector to get to EPCC or better, and also the social housing sector to get to EPC or better by 2030. There are not the materials or the workforce to deliver that, in my view. Now, which means there's got to be some flex around some of this. The other part is, what funding will come from government for those who can't afford? And that's the other part of this, that there's still, we've kind of got I think we've kind of got the dot to dot where we've joined the dots, but we've still got no colour on the page at all in any of this. And government are going to have to give this blueprint, or regulators are.
Yeah.
And until we get more of that, I think it's very hard for the industry to decide where they're going, either by way of funding those that are already green by way of greater lending or better affordability, or what we do for retrofit, because the retrofit journey is still complex for customers. And for a customer who decides they want to go there, making that decision of what they want to do to their property, then how they fund it, is very complex between unsecured, mortgage, or even lifetime, if they're in that part of the journey. Very complicated advice, very difficult to do, and not all people will be sitting in the space with all the product and competency to do that.
Absolutely. And do you see advice on sustainable housing becoming part of the process for an advisor?
I think it has to, because if I look at who is going to be the person the customer's going to ask, do I genuinely think estate agents are going to be tooled up and skilled enough to deliver this? I don't think so. The builder is going to have a vested interest in terms of this. The estate agent is going to have a vested interest in all of this. And we're seeing some models being built in some sectors at the moment where they're beginning to work out how they piece this journey together. But ultimately, the only person the customer is probably going to have this conversation with about, I'm thinking of doing this, how do I fund it, will end up being their mortgage advisor.
Absolutely.
And therefore, whether they want to or not, I think they're going to be sucked into it.
And do you think lenders play a role in kind of that education piece?
I hope so. I mean, I think all education around this is important. But I think delivering clarity of what it is you're trying to do by way of what you want. I think one of the big challenges every lender is going to have is, what shape of a book do they want going forward? And whether it's in the private rental sector space or the residential space, or even the social housing space, where I think there's going to be a lot more forcing by government entities to fund that, and in private equity partnerships, perhaps with local authorities. I think the interesting part for me is the Burnham experiment in Manchester, which I think Labour Party are looking to replicate across other parts of the country. Not all of that will come from sovereign wealth funds as it has in Manchester. So we're going to have to find different funding models. And large organisations with big balance sheets, I think, will be encouraged to participate in that. And that's not a bad thing, because it's how we energise the economy using the power of our domestic institutions.
Yeah, thank you. Thanks, that's a great answer. So Robert, your role at AMI has involved lobbying regulators and policymakers. What do you still think might be to come from the regulator?
I think consumer duty is probably the biggest single change from a regulatory perspective that there has ever been.
Yeah.
I think people who haven't listened to the messages haven't understood exactly how game-changing it probably is.
Yeah.
As we're beginning to see some stuff emanate now, particularly if I go and look at the work they've just produced in the general insurance market, the work they talk about in the pure protection market, and thinking of the market study now on pure protection, we're beginning to see a sea change when they begin to talk about what it is their expectations are. What is a good consumer outcome? Is a good consumer outcome the customer gets the mortgage that allows them to either acquire or keep their house at the cheapest price? I don't think so. The good consumer outcome has to be having the buildings and contents insurance wrapped around it to make sure that on the day they exchange, they're protected.
Yeah.
A good consumer outcome might be, for certain firms or customers, having a fully protected mortgage with life, critical illness and income protection. Or are we genuinely thinking about our products in the right way? Because if we're building products and looking at the GI, the general insurance work, where the regulator's being to ask some fundamental questions about product construction, is there enough dialogue in our marketplace that says, if you're building a product, if there is an ability to overpay, how many customers do it, and how much of cost is in that product for giving that facility? And if it's only used in a very isolated occasion, why is it there as a product feature? If we have, are we genuinely happy that our policy on early repayment charges fits with the model that works? And are we making profit off that or making losses? Because the regulator's really interested in that now. Have we thought about products in those types of ways? And do we, as the broker, advisor, distribution market, challenge enough of lenders about what those product features are and whether they actually work for the customer? Because I don't think we've ever had that really in-depth dialogue between the advice community and the manufacturing community about what a good consumer product or outcome genuinely is.
Absolutely.
And I would almost lay down a challenge that says, why has nobody thought about the fact that if you had a fully protected mortgage, that rate is not cheaper? In the same way, It might be cheaper effectively because it's more energy efficient. What is the difference if there's
Yeah.
a fully protected mortgage? Because the outcome for the lender and the consumer is always safer. That's our argument about what if the customer stopped paying. Well, yeah, the customer can stop doing lots of things.
Yeah.
That's an element of trust in this somewhere in this process.
Yeah, absolutely. Is this on your agenda for before you leave, Amy, or is this something you're going to hand the baton over for?
Oh, I think that's a baton handing. It's leaving the hand grenade with a pin in for my successor.
That's great. That's brilliant. Thank you. So, Robert, 16 years at Amy. Lots of remarkable things may have happened over this time, personally, for the market. Is there anything that really stands out for you?
I think the biggest shift for me has been when I started in this job, the lender and advice community were almost at loggerheads. Not fighting, but they weren't partners.
Yeah.
The biggest shift, then I know I've worked hard at this, is how do we get that partnership that genuinely is about making sure that advice firms understand lenders' issues and lenders understand advice firms' issues, and working together for the benefit of the customer to get to the right outcome. That has been a passion for me about partnership. Is it all the way there with everybody? No. Do we occasionally fall out like good families do? Absolutely. And so we should, because a good relationship is where you can disagree and then still agree that you're still going to work really well together afterwards. Because that is the way that good dynamics work, where you can have these debates and discussions but still love each other afterwards.
Absolutely.
And I think that for me is the biggest transformation. But like everything, if you don't stop working at it, it will fester and die.
I think there's been huge progress in the past few years, definitely time that I've been in mortgages, and Amy and Imla have a brilliant relationship. And I think the relationships from direct brokers and the lenders are really getting there now as well. So good progress.
Yeah.
Well done.
It's a team. It's a team.
Absolutely. So, Robert, burning question. You'll be retiring very soon.
Yeah.
What is it that you're going to be doing with your time? Do you have anything slightly out there that you might want to achieve?
I intend to carry on as I already do as a non-exec at the Darlington Building Society. Although the travelling up and down of there is a challenge sometimes. I really enjoy being involved in a small regional mutual. It's a fascinating thing to do. And hopefully some other organisations might choose to ask me to do some work with them. If they do, it's great. If they don't, I will do other things. I want to go back to doing a little bit of golf, a little bit of watching cricket. There's one burning thing that I'd really like to try to do, which is a bit weird. As some people know, I was a lot younger, I was an athlete. I've kind of got this desire to go back and run 100 metres in under 13 seconds before I shuffle off this mortal coil.
Absolutely.
Whether my body will allow me to do it is a different thing entirely.
We've got some time to train. Slow but sure. Well, we'd be very happy to show the exclusive video of you completing that race.
And I might come for sponsorship.
Brilliant. Absolutely. Well, thank you so much, Rob, for joining us today. It's been really insightful. These webinars are all about our brokers and giving them as much information as we possibly can. So having the voice of the broker here has been absolutely brilliant. Thank you so much. And now we're going to hand back to Eloise.
Thank you.